Hi, and welcome to our budget reaction. My name's Anthony Davies, and I'm a tax partner at Carpenter Box. Rishi Sunak announced a number of changes to tax affecting UK businesses in the autumn budget announcements on the 27th of October. We're going to spend a little bit of time talking about some of the practical impacts of these key budget announcements on UK businesses. Overall, the budget was relatively light on any major changes. Any big changes had already been announced or formed part of previous consultations by the government, and therefore we didn't really see any major surprises. The property sector saw the most headlines. The Chancellor will implement the previously announced residential property developer tax, which will be introduced from the 1st of April 2022. But this will only impact on larger property developers, applying a 4% tax charge on profits over £25 million. This is expected to be provided in the form of a group-wide allowance, which will only be available once to each group of companies and can be allocated as appropriate within a group. The policy objective is to bring an end to unsafe cladding and to provide a contribution to the removal of such cladding. The government also announced an extension to capital gains tax filing for residential properties and the payment deadline from 30 days to 60 days. The change will apply immediately for transactions completed from the 27th of October 2021. This will be welcomed by many advisors and will provide a little more time for taxpayers to calculate the tax due and make payments to HMRC. There was also an announcement that the ATED charges will rise by 3.1% from April 2022. This charge applies mainly to companies holding larger expensive properties. For companies holding properties worth individually under £2 million, the increase will actually translate practically to around a couple of £100 per property. There's another number of exemptions to ATED charges, so taxpayers should ensure that they properly review their position. In other areas, the annual investment allowance will remain at £1 million until 2023, but it should be noted that the 130% super deduction previously announced will run to the same date, and therefore the benefit is likely to be small as many businesses will seek to adopt the super deduction over the use of the annual allowance. A consultation has also been announced, which will hopefully widen the UK's very beneficial R&D tax relief. Any changes that allow for wider tax claims, wider R&D tax claims are welcome and will hopefully help to attract businesses invested in R&D to the UK. No significant detail has been provided on this consultation at the moment. Hopefully further details will be announced next year. On an international level, cross-border group relief claims will be removed from the 27th of October 2021, a measure that was expected post-Brexit. It's unlikely, however, that the abolition of this relief will have a major impact on the majority of businesses, as the relief was only available in very limited circumstances in any case. As a reminder, other previously announced changes include the increase in corporation tax rates from 19 to 25% from April 2023, which will impact on all businesses. Tax on dividends is due to increase by 1.25% from 6th of April 2022. The two changes increase the effective tax rate on dividends in the basic rate band from 25 to 31.5%. Directors may therefore want to consider whether dividends are declared before the effective date of the change. As I said, there were no significant surprises in the budget and a limited number of changes. So thank you for listening. And if you have any questions related to the budget or any other areas of tax, please feel free to contact us.